So we'll be just looking at introduction to accounting, where we'll be looking at the two different main concepts, which is bookkeeping and accounting. We'll be also looking at the internal stakeholders and external stakeholders. And these are like multiple choice questions and short answer questions before, they may give you a question and they want you to name the different stakeholders, examples of stakeholders, what are bookkeeping and what is accounting. So we're just gonna go through this like maybe in about 6 minutes, and then what we will do, we'll just look at those two answers to those few questions and see how best we can answer each of them. So in total, the total video may be about 12 minutes. So let's get started. So for chapter one, the objective here is to ensure that we understand the basic concept of the concept and purpose of accounting. So there's nothing new about keeping complete, careful records of financial statement. Over the years, person want to find out what is happening, how are they spending, what are they doing to reduce spending, how are they ensuring that their sales are being met, or what are their sales strategy. So in doing so, they would have had individuals and organization in their organization to monitor and to ensure that the smooth running of the business are maintained. As we all know, apart from non-profit organizations like charities, most persons go into business to make a profit. So if you're making a profit, that's the main reason. And they do those by ensuring that your business activities are within your realm of business. How are you securing your revenue? What are you doing? What type of business you're doing? How are your expenses? How are you paying for your bills? And what are your revenue streams? Do you have enough money to pay for all the expenses that you incur in a month? And what's the best approach are you doing in investing? Are you planning on borrowing from the bank? Are you injecting your own funds, whatever means your capital is? So in order to ensure that those fundamentals are adhered to or properly dealt with, your financial activities basically narrow down to two small terms, which is bookkeeping. Now, bookkeeping is a record of financial information, particularly transaction, in a systematical way. And as we move on, we will see about the accounting cycle, and this is where most of your bookkeeping knowledge will be centered. This is how you will ensure that you have proper record keeping, because without proper record keeping, you will not show a true and fair representation of your activities within your business. So, what is bookkeeping? Here, it gives you a broader explanation, and then here is like a summary. So, you tend to zero in on this definition when you're writing your questions, your answer to your question. So, it says all financial transactions need to be recorded in a systematical way so that the owners of the business and other users can be provided with the information they need to make the right decisions. The record keeping aspect of accounting is known as the bookkeeping. So, in a sense, bookkeeping is a record keeping of accounting. Here it says bookkeeping. These key terms are what you use and remember for your little short answer questions. So it says bookkeeping, the record of financial information, particular transaction in a systematical way. And that's all there is to it. How your transactions are recorded, and it has to be in a systematical. Systematically mean that the way in which you collate your information, the record keeping, how you enter your information into whatever system you're using, and what are the process in doing that. After all that is done, then from the bookkeeping records, you need to generate your accounting. What is your accounting? So the accounting is a preparation of financial statements and providing some interpretation of what statements reveal is revealed. Here it says the accounting is a selecting, classification and summarizing of financial data in ways that provide the owners of the business and others with useful information to help them assess performance and plan future activities. So, what does it mean by plan future activities? You need to know what you will be doing in the future. Are your business operating in a way where your profit will continue to grow, or you will be at a loss? Information that you use for these, you use your balance sheet. Well, it is no longer called balance sheet, so it is balance sheet. So it's called financial position. That is one that you use. So it's like it's a snapshot. It's a snapshot of what is happening at your business as we speak. As we move further, you will understand it more. The next one, you will have your profit and loss, and this shows all your income against your expenses, right? What you earn to what you spend. No longer profit and loss, just statement is statement of comprehensive income. Those are the two main financial statement that is used for this introduction to accounting. After that, you will have your stakeholders. So, who are your stakeholders? So, stakeholders are individuals and organizations that have an interest in how the business perform. So, example of those stakeholders are the owners, of course. They are the one who invest their personal savings, setting up the business, and who is dependent on the success of the business. You have the manager oversees, who are concerned, they oversees the day-to-day performance running of the business, so that if there are any weakness, if there's anything that need attention, they're there to pick it up, to act on it, to clarify it, and to correct it, and to ensure that the smooth operating of the day-to-day business are adhered to. Another one of your internal and very important are employees. They are dependent on the success of the business. And it depends on what type of business you have. Without employees, your business is at a loss. So you want to ensure that they are properly compensated. They are working in a risk-free, harm-free environment, right? Now you have a number of stakeholders, which are the external stakeholder. You have the customer, who depends on the business being successful so that they can rely on being able to buy goods and service that they need. And of course, you're going to provide your customer with the best of the best. Suppliers, without the suppliers, where you're going to get your goods from? What do you sell? Or are you're gonna concern about how much you're gonna pay to the business, how much you're gonna pay for the goods? Is the goods of high quality? Do you have repeat engagement? You know, or your orders being delivered? Are they delivering on time? So those are the external one. If they are not, then you may need to go and find someone else where not necessarily cheaper, but maybe of better quality, or who is punctual. The bank. Or is the bank your external stakeholder. The bank will lend you funds, provide source of finance. You may not have enough to inject, so you go to the bank. What the bank will ask for you is to provide them with like a projected cash flow, so you can, it's like giving your word that this is what your business is doing at the moment, this is what your profit looks like, and with all this being said, I will be able to pay back the loan at interest. And it's not that you just go and do a cash flow by yourself. Normally, um it would be like a notice to reader, you know, like someone who is qualified would assess your books and prepare all of that information, so that the bank is satisfied that the information presented is from an independent source. So it's not you just gonna do one, because you can put everything that you want to make it pretty. So you get an independent personnel who will ensure that the information that you're presenting is free, is more and less. They give their assurance that the information you're presented to the bank gives a overview of what the business is. Another one of your external or your potential investors. So the way you look, how is your business progressing? So potential person may want to come and invest in your business. Very important, the government. The government is have a vested interest in a business because they want to assess your business for taxation purposes. Your competitors. Your competitors are important because without competitors, you don't know what is happening. So it says competitors who will wish to compare their results with those of the store. So you want to make sure that you're operating in an environment where there is demand and you have the supply, and you try to ensure that you're always at top of your game. Last but not least is your local community. How does the local community becomes a stakeholder? This is an important aspect of your business. You want to make sure that you're working in an environment that is safe. You provide employment opportunities to your community. So you're giving back, so to speak. You are not operating where whatever your production is harmful. You have to ensure that you are following the rules and regulation of whatever you're produced, and so that whatever information you whatever information, whatever goods you're producing are being done in an environment that is safe. So to to finish this off, it is important to remember that accessing financial statement of a business in is in many cases very restrictive. Sole trader and partnership, right, do not have to provide details to external. So they don't have to do anything like for potential investors, unless it's within their circle other than the government. Everyone has to pay tax. Everyone pays tax. If you're not paying tax, you're evading. And tax is based on normally there's a threshold for a certain tax to be paid. So with all of that being said, I mean the different type of stakeholders, the internal and the external. What's the difference between accounting and bookkeeping? Remember, bookkeeping is recording of financial information in a systematical way. Accounting is the classification and summarizing of the financial data, in which they provide the owners of the business and others with useful information to make informed decisions for future use. You have internal stakeholders, which are your owners, the managers, the employee. Topping off with the external, which is more bigger, have a longer list than the internal, your customer, suppliers, your competitors, the bank, potential investors, government, and your local community. So we're going to look at these questions and let's see how best we can answer them in about 10 minutes. So here it says, here it is asking us to explain the term bookkeeping. So from what we have looked at before, we could say bookkeeping is an aspect of accounting in which information is prepared in a thematic way. Example, EX recording day-to-day transaction. Oh, sorry. Day-to-day transactions. So you could use that as an example, or you could write information is prepared. Bookkeeping is information, the aspect of accounting in which information is prepared in a systematical way. Example, recording day-to-day transaction. Now, the next one is explain the term accounting. So how would you explain the term accounting? Accounting then okay. Accounting is the selecting, classifying, and I'm sorry, summarizing of financial data. That helps the business, that shows the business performance, or to access and improve business performance in a way that shows the that helps to access the business performance, that helps Interested. Let's put interested parties. The business performance. Example, balance sheet. And remember, I say it's a statement of financial position. Okay. So here it gives you, it says stakeholders. It says Joel has just opened a business selling fresh fruits for a market stall. How does all the work? He does all the work for himself. He does all the work for himself and he supplied all the finances to set up and run the business. Identify one internal and three external stakeholders who will have an interest in this business. So, what are the internal stakeholders and three external stakeholders for a food vendor? The internal stakeholder, let's use another pen. The internal one in this case is the owner. An external, so you'll have suppliers who supplies with the food. You'll have the customer who you sell to, and government for taxes. You can never go wrong with saying government for external. State the interest in the business of one of the external stakeholders. And as I just said, for government, we're gonna go with taxes. Pay taxes to the government. The next one, question 4. Say the interest of the business of one of the external. So we use taxes. So for 4, it says that Seema owns a chain of fashion store worth several $1 million. She was recently able to expand the business with the help of a loan from the bank. Identify 2 internal stakeholders other than Seema. State why the bank who supplied the loan will be regarded as an external stakeholder, and explain the interest the bank who supplied the loan will take in Seema's business. So remember, we talk about 3 internal, so we use one. They don't want the owner, so we can say the manager. So this one is employee and manager. state the why the bank who supply the loan will be regarded as an external. So the bank is an external because it involved with SEMA business as a way of providing finance, right? So state why the bank who supplies the loan will be regarded as an external. So the bank is an external because it's involved with SEMA's business as it provide. Because it provides SEMA finance for its business. Explain the interest that the bank who supplied the loan will take in SEMAs. So the interest that the bank will have is that it will ensure it, because it provides the loan, it's concerned about how the security of the loan is, or will he be able to pay back the loan, will he be able to pay the interest, and will he have a problem. So you could say that the bank concern is the bank interest is how repayment of the loan provided and the interest will be paid in relation to the, the loan agreement. So in a sense, the bank interest is the repayment that, so they want to know what with the blue pen, what level of security. Oops, that's not a security spell. SEMA business, what SEMA business can provide. And in that they will look at their look at SEMA's cash flow and its operation. Yeah. So those just, I just give you generic answers. You have to be very think on the question being asked and answer it accordingly. So how explain the interest the bank will supply. Explain the interest the bank who supplied the bank will take into SEMA's business. So I want to